So now you know the government is taking 10% from your investment profits. But here is the real question nobody is answering. Where should your money move to now after this? Should you still invest in treasury bills, or is there a smart way to beat this tax? Because if you get this wrong, you could be losing money every single year without you knowing. But at least I've explained that in this video. The new investment rule we should be looking at now, we should listen very carefully. It's no longer about the safest investment, it's about the smartest after tax return. Because what matters now is what you keep, not what you earn. Option 1, we have the FGN savings bond. Let's start with the hidden gem. Why are smart investors moving here? Because it's still tax-free, it's still higher in long term, that is 14 to 60%, also safer, backed by the federal government of Nigeria. Let me give us a very good scenario about this FGN savings bond. 1 million investment at 15% will earn you 150,000 and you will still pay zero tax, isn't it? Compare it to treasury bills where you will have 135,000 after tax. So you have just earned 15% more, doing nothing different, but just investing in another federal government instrument. Option 2, we have the money market fund. Now let's talk about that. Money market fund, they are also taxed, but here is why people still use them. They are easy to enter and easy to exit. They are good for emergency funds, but they are no longer your wealth builder. They are now a parking space for your cash before you use them for something big. That's to me. Also, you can invest in stocks. Now this is where things get interesting. Nigerian stock market is a very complicated one. I have videos about them. You can watch them here. I have it here. Some stocks are paying close to 20 to 30% returns. That is capital gains plus your dividends. Even after tax. How to invest in them, you can watch them there. I'll put the video here. Let me give an example. You have 1 million investment and at 25% return, that's like 250,000 profit, even if taxed, still far better than 135,000 of treasury bills. But to be honest, this comes with its own risk. So I will say, don't rush into stocks blindly because it's very complicated more than what you think. Now let's move to the smart strategy, what I personally recommend. If you want to play this game like the wealthy, don't put all your money in one place. Do this instead. Simple portfolio strategy. 40% of your financing in FGN savings bond, 30% in the money market fund, then 30% in the stock market. This way, you reduce the tax impact, you increase your return, you also manage your risk, and with that, you stabilize everything. So, the biggest mistake to avoid: don't leave your money in one investment because it feels safe. Don't ignore the tax impact I've just explained in this video without understanding the risk. Because in 2026, safe can quietly make you poor when you look at the money you will lose in the long term, not just in the short term. So my final truth is this: the game has changed with the new tax regime in Nigeria. Just invest and relax. That was then. But now, you must think, calculate, adapt. So here's my closing remark for you. If you don't understand where your money is going to, someone else will take it, tax it, inflation will eat it, and your decisions will be paid for in future. All these things are competing for your money. So the question is simply this: will you stay average, or will you start investing like the top 1% that knows what they are doing? So if this video helped you and make you understand something, please subscribe to Charles Stock Money. It is free of charge. Yes, it is free of charge. Please subscribe, I'm begging, because here we don't guess, we don't follow noise. We do the market analysis bit by bit in simple ways so that you can understand. We build real wealth here, and by the grace of God, at retirement we'll be living big. You have a great day.